Welcome back to the Startup Operators Weekly Roundup. The Weekly Roundup is the show for people who want to stay updated with major developments of the Indian startup ecosystem. If you're new to the podcast, please do subscribe and share it with folks you think will enjoy the show. Now, May was rather a very bleak month for the Indian startup ecosystem, but it was very encouraging to see Delivery list at a premium when it debuted into the stock markets. And from the week that was, Country Delight raised the largest venture capital round from the week, followed by JAR and Genrobotics. We also saw a lot of action in the EV space with fundings going on to build the Indian infrastructure to accommodate it. And along with that, more news we'll discuss. But before we get started, Roshan, how was the week for you?
It was awesome, man. I mean, we just discussed delivery trading at below the list price on gray in the gray market. It was very heartening to see that they had gained big time when they listed. So as I was saying, I mean, it's a fundamentally very innovative business, and at this stage of their journey, I mean, they are spending more than they earn, but you will see soon that that will tilt. And I guess retail investors also agree with that emotion and the kind of pricing that future prospect in, right? So yeah, I mean, very interesting and good to see some positive news amidst all the doom and gloom for sure.
Yeah. All right, so let's talk about Country Delight, right? Now, I remember seeing Country Delight when I used to go to the supermarkets and buying milk. I just thought it was like another Amul brand out there. But while I was researching for the Roundup, it's actually a D2C brand that deals not only with dairy products, but also fruits, vegetables, and bread. And they source this directly from the farms and try to get it to our doorsteps within 24 hours. Yeah, and with this massive $108 million Series D round, which was led by Venturi Partners and Temasek, they will be, of course, increasing the efficiencies of the entire supply chain. Today, they are doing close to 8 million deliveries a month across 15 cities. And while we have seen, the likes of Blinkit and Swiggy is trying to optimize deliveries, for a company like Country Delight, I think one of the biggest hurdles would be maintaining that freshness. Right, because there's a lot of cold storage also happening. How do you see things working over here?
Well, it's a very complicated sort of a value chain, right? This whole farm to plate ecosystem per se, because there are multiple nuances, and especially when you're talking about milk, essentials, dairy products, and so on, right? I mean, it also has a shelf life. It has to be stored a particular way. And if you look at some statistics, right? I mean, India wastes something like 30% of the food that is produced. There's a huge gap in that entire ecosystem. And also, I mean, there are other aspects in terms of tampering with the quality of milk and not having that, natural fatness or whatever it is that milk is judged by, right? And their promise is literally that, I mean, imagine if you had a cow or a buffalo in the backyard, right? I mean, we're going to take you back to those times when you would get proper fresh milk at your house. They seem to have a lot of love from consumers. I was, going through some of these reviews and so on. People do swear by it, and it's a very convenient way, right? I mean, you kind of stock up on their app and it gets delivered to your doorstep. Yeah, I mean, very interesting background of the founders as well. I mean, none of them seem to have like agri kind of a background. All of them seem to be like MBA grads, private equity experience and so on, right? But again, I mean, it kind of reinforces the point that if you pick a large enough problem, I think there is definitely value, right? I mean, consumers will respect you, and investors are kind of seeing the same thing as well. Yeah, you'll see many more of these kinds, for everything that we take for granted, like veggies or whatever. All of these guys will kind of backward integrate as well, right? I mean, the likes of Big Basket and Swiggy's and whatever, they will go down to the source, because that also means that there is more value to capture, there's more margins. And yeah, I mean, so this is really interesting. Yeah, for sure. I was really shocked that it's a 100 million plus round, though. I mean, of course, I mean, it merits a lot of money. I mean, the kind of stuff that they're doing, but just came out of left field for me. Yeah.
But also, if you look at the unit economics of the space, right, the ticket sizes are, of course, not that large. So the profit you're making per customer is fairly low. And in this space, we have seen some acquisitions. So, for example, in October 2021, Milk Basket was acquired by Reliance Retail. And then a couple of roundups back, we discussed that how Swiggy had acquired a Super Daily, but they shut down the operations in 5 major cities.
But the interesting thing is, see, for stuff like milk, right, milk and dairy and stuff, you don't change these things too often. It becomes part of your behavior. How often do you change your neighborhood local milkman, or the way you get your newspapers or whatever? I mean, it's your regular behavior. Although I wonder who gets any newspapers these days. But yeah, that is really what they're betting on. And of course, I mean, they're adding a bunch of these other stuff, right? Fruits and veggies and pulses and whatnot. Yeah.
So let's move on to the next topic. JAR has closed a $32 million financing round in February this year and is already in talks to raise new funds to scale its product and expand its offerings. But in India, for decades, banks and mutual funds have been trying to tap into the masses with financial products. And despite investing like millions and millions of dollars, they have hardly been able to capture the markets, especially when you compare this with, let's say, a country like USA, where more than 90% of the population invests. Now, the value prop which JAR brings in is kind of reminiscent of those piggy banks used to, like Matka piggy banks used to have, and which like collect the coins. And what JAR essentially does, it reads through your transaction details, through your SMSs, and rounds it off to the nearest 50th or 100th and buys digital gold with that money. Now, of course, a very interesting proposition, but how do you see this? I mean, how do you see this scaling?
It's very interesting, right? I mean, because I think they've tuned into a popular sentiment, which is that most people save after they spend, right? They don't do the reverse, right? I mean, you're supposed to save first and then spend, but most of us, I mean, we spend and then save, right? And yeah, I mean, JAR has a very simple value proposition, that is, if your, let's say, cab fare is 142 rupees, or if you bought something on Amazon for 394 or something like that, that extra 5 rupees or 6 rupees you could choose to invest in JAR, and JAR will put it in digital gold, right? Which is some kind of ETF, I guess, gold-backed securities, whatever it is. And yeah, I mean, you don't expect gold to do like, Bharatanatyam, right? Go up and down as much. You expect it mostly remain stable, and it's a way of protecting your wealth. So yeah, I mean, it seems interesting. It's good to encourage people to save. I mean, I think a lot of the innovation out there gets us to spend a lot more, and it's nice to see that there's innovation that's helping us save. Founders also have very interesting background. Both of them are proper tech folk, 15-20 years of experience. So yeah, very interesting for sure.
Yeah, I mean, I've been using Jar for the past few months, and I've been like enjoying the experience. But it's been a while. I've checked like how much money have I either gained or lost. All right, so I don't think we have really spoken about robotics in the roundup for a while. So it's good to see that we are Genrobotics this week. This was founded in Kerala and had developed this sewer cleaning robot called Bandicoot for phasing out manual scavenging. They have received an investment of 20 crore rupees from Zoho Corp. Now, Genrobotics' mission is to eradicate manual scavenging in India and provide safety and dignity to workers in the sanitization and oil and gas industries. Now, this is such a fundamental problem that they're solving. We are talking about, drone deliveries, we're talking about, 10-minute deliveries, but these are like the core problems of the society. Right? And the work that they have been doing has been like really great. And I think they even had invited Prime Minister Modi for the launch of one of their products.
Yeah, and in fact, just this morning I was seeing Prime Minister Modi's clip of Man Ki Baat, where he was, really appreciating Mr. Sridhar Vembu, right, the founder of Zoho, for all of his help with entrepreneurs, mentoring them, coaching them, and so on. See, manual scavenging is one of those jobs that should not have existed to begin with, right? I mean, it's probably the worst of the worst. And I really, really like the fact that these folks are trying to use machines to do these things, right? Because really no human should earn their living that way, right? I mean, it's very terrible. So yeah, I mean, it's a very, very welcome sort of an innovation. Also, I mean, we often talk about, hey, robotics is going to make us all slaves of automation and whatnot. And I think the first degree of innovation will just free up all of our higher order thinking. And it's stuff like this, I mean, stuff like cleaning and those kind of things, right? Yes, I mean, I think there will be an in-between period where the folks who are, for example, drivers, right? Now driving is one of those ubiquitous jobs anywhere in the world, right? I mean, what's going to happen when we have fully automated self-driving cars everywhere? We're going to have a whole demographic of people who are going to be left in the lurch, right? I mean, I think it will sort of correct, and we will evolve to do different things more that require more humanness, right? More higher order thinking. So yeah, really happy for this innovation, and I hope we see more of this.
Yeah, but I mean, before we see self-driving cars in India, I think before that we'll be seeing a lot more electric cars. And to that front, BluSmart on Thursday had announced that it has raised $25 million as part of its extended Series A1 round, which was led by BP Ventures and Green Frontier Capital. Now, BluSmart aims to add 5,000 EVs and scale up its super hubs across Delhi NCR. And interestingly, because of the way Delhi is situated, like so many tourist spots around, like you can go to Rajasthan, Himachal, Uttarakhand, they have also started this long range EV cab services. Now that's the first which at least I'm hearing about it. How viable do you actually think would EV be in terms of long distance travel?
It depends on the charging infrastructure and so on, right? Because EV is more fuel efficient, cheaper, more convenient in some respects, right? But everything hinges on the fact that infrastructure has to catch up. And if you have these kind of ecosystems or hubs where people can operate fleets and so on. So that could be like the first level of adoption, right, before it becomes really mass. And if you remember, I think some roundups back we had mentioned that by 2030, if we're going to have EV majority on the road, mostly it will be like these kind of things, right? I mean, commute vehicles, passenger vehicles,
Right.
those kind of trucks, for example. Those are ones that can completely become EV, right? Before some of the other segments, right? Whether it's luxury vehicles or your two-wheeler super bikes or so, whatever it is. Elon Musk, in fact, had put out an interesting tweet last week on that same note, right? That Tesla will not set up manufacturing plants in India unless sales and service is more amenable. I think there is like a humongous duty on cars of greater than 40k, I think 40k-ish, so which is what he's talking about. And there are contrasting opinions this way and that. Bhavish of Ola, who seems to be in the limelight these days more often than not, had quoted that and said no thank you, right? Almost alluding that Indian brands will catch up and so on. I'm not sure, I haven't really made up my mind about this. On one end, I feel that Tesla being here will speeden up the ecosystem. At the other end, I feel that Indian brands should definitely like catch up, and we should be more Atmanirbhar as such. As always, I think there's a middle approach, and I think wiser minds than us are like thinking about these things actively. Yeah.
Yeah, also I read this article where Hindustan Motors, the maker of the classic yellow taxis, they are also planning to enter the EV space.
Wow.
I think they signed some partnership last week where they formally entered into the space. So it'll be interesting to see how that plays out.
Man, those cars could mow down a building, that ambassador cars of age,
Yeah,
right? I mean, uncomfortable as hell, but yeah, I mean, like really, really
it's
sturdy
sturdy,
cars.
yes.
Yeah.
But a great point that you mentioned was how the B2B part will be driving the entire EV adoption in India. And to that extent, Three Wheels United, which is a fintech company for EV financing, has raised $10 million as part of its Series A funding round. Now, this was led by Delta Corp Holdings with participation from both new and existing investors. Now, what TWU has done is that they've developed a platform to finance, light electric vehicles, which are geared more towards micro entrepreneurs. So think of like your Uber and Ola drivers, your delivery executives, or logistics, right? They allow for up to 100% of the entire financing. And interestingly, instead of paying monthly EMIs or yearly EMIs, they are able to charge them on a weekly basis. That's how the demographic which they're targeting for is actually earning. So this will be very interesting, as they're tapping into the finance of the auto rickshaw drivers who actually make money that way, and is also aligned to the lifestyle of these folks. I think more than in cities, we'll be soon seeing EVs fly on tier 2, tier 3 cities.
Yeah, yeah. No, this Three Wheels United is very interesting. I just happened to read through a few of their web pages and watch a few videos. They're financing these folks because they believe that, a vehicle is an asset that earns, right? I mean, and it causes upward mobility, which means that, you earn an income and then you move up the societal ladder, so to speak, right? It's very difficult for these folks to get any loans because oftentimes, banks or NBFCs ask for collateral, and a lot of the times the people at the bottom of the strata don't really have too much to show, right? But fintechs like the Three Wheels United are focusing on transactions, are focusing on other ways to predict risk, basically, right? And I'm going to be talking to Pushkar of Drip Capital next week, and they finance SMEs basically, right? And I think newer ways of financing are emerging, where they're using little more of a technology-led approach, data science, and so on, to figure what is the risk profile of someone, whether their ability to pay back is good enough or not, right? So yeah, I mean, super interesting, and it's nice that they're kind of verticalized into a segment of the demographic as such. I think it'll help them specialize and be more relevant to that specific demographic than go out there and serve the world as such, right? So interesting business for sure. American founder, right? Yeah, interesting.
So we are seeing Indians become CEOs of global or slash American companies, and then Americans are coming
Yeah,
and setting
and
up.
it's a not for profit as well.
Yeah, oh, I wasn't
Yeah,
aware of that.
it's a not for profit. Yeah.
Cool. So now we have seen a sharp decline in the number of venture capital investments which are going on in the country for this month. Despite that, three funds have launched new investment corpuses this week. Investors India, which is an early stage venture capital firm that has been investing in the country since 2006, made a significant announcement that it will be rebranding itself to Athera Venture Partners, along with the launch of its fourth fund. Now, this will be close to $120 million, which is more than double its previous fund. Till date, I think they have invested close to 13 startups, including Pixel, which is a space technology company, and Euler Motors, which is an automotive technology startup focused on commercial electric vehicles. They also had a stellar list of successful exits, which includes Policy Bazaar that IPO'd, Redbus, which was acquired by Naspers, and Unboxed, which was acquired by Netcore. The second investment corpus was by Riverwalk Holdings, which is anchored by Singapore-based Thakral Group. They launched a 150 crore rupees fund for investing in India. With a focus on enterprise SaaS, fintech, and consumer tech and brands, the fund will invest up to 10 crore rupees per startup and already has made 4 investments. Dallas-based early-stage venture capital fund, Dallas Venture Capital LLC, they are finalizing a dedicated fund for India, which will be close to around 20 to $50 million. They also announced the close of its US fund, DVC US Fund 2, at $80 million, and plans to invest close to $130 million in enterprise B2B SaaS startups in India over the period of the next 5 years. But it's interesting, we have seen a lot of consumer startups coming up, and right now, I mean, two of these venture funds are having a focus with enterprise B2B tech.
Yeah. No, I think enterprise and SaaS, especially, right? I mean, we have a long way to go, right? Because we've been building applications for over 30 years with IT services and whatnot. And we've picked up enough domain knowledge, enough know-how to kind of stitch these applications together. And we're productizing very, very rapidly, right? So you will see a lot more applications serving certain specific domains, whether it's retail or finance or whatever else. And we have a long way to go. See, when people ask me how can I stay enthusiastic even now when all of the doom and gloom, I mean, I just point them to the data, right? I mean, where are all these funds going to go? Early stage, at least, you're seeing kind of a slowdown in early stage right now because it's a shock, right? I mean, when things like this happen, people definitely pause, right, to reflect on what to do next. But obviously, I mean, it's going to regain momentum, right? I'll stick my neck out and say that in another 3 or 4 weeks, maybe like a month and a half, you will start seeing 2021 type of momentum on seed series A kind of deals, right? I mean, it's definitely going to happen because see, the other thing is that you can't protect your money by stashing it under the pillow, right? I mean, it doesn't work like that. Where can people deploy their money? What will these funds do? I mean, funds have raised this money to give back at a certain rate of interest to their LPs, right? It's not like they will hold it for as long as the period and then give it back
Right.
with principal and with some whatever else, right? I mean, people are not expecting FD kind of rates like 6%, 7%. They're not expecting that, right? They're expecting a proper return rate, which is why they're investing in these funds to begin with. So yeah, I mean, I will say this again. I think in about 4 to 6 weeks, you're going to see the 2021 momentum for seed series A return for sure. I did say that you will not see $50 million checks, and
Yeah,
yeah,
now you're seeing
there were
100,
a couple
100
of
plus.
$50 million checks, and there's a $100 million check and whatnot. I think growth stage will slow down. Growth stage will definitely slow down. On that note, I mean, some of the salaries that a few of the larger startups are offering are just like insane, like absolutely insane. Definitely not sustainable, and it's a net negative for the ecosystem also, I feel, because you're just pricing people out of the market. They're not going to get a 20% or 30% hike ever again on top of that base, right? So yeah, definitely interesting times ahead.
Yeah, if you think about it, right? Of course, for VC firms like Sequoia, Tiger Global that have been in the market for quite a while, they have seen the worst of the worst. I mean, there was 2008 recession. They survived that. We saw a new breed of startups. COVID happened, another breed of startups coming in. So I'm pretty sure that people are sitting on that side of the table.
Yeah.
They know what they're doing.
No, it's not just. I mean, I wouldn't like say the blanket that like I mentioned last time also, right? I mean, it's easy to mistake everyone in a bull market to be geniuses and everyone in a bear market to be duds. I don't think that's the case. I mean, it's not the case that everyone knows what they're doing or no one knows what they're doing, right? I mean, somewhere in between, right? We kind of know what we're doing sometimes. I just feel, I mean, simply given the economic incentives right now, I mean, India will stand to benefit, right? Forget about a China plus one strategy. There is no China strategy right now at this point for some of the
Yeah.
startup funds and whatnot, right? I mean, because you've seen what's happened, how the entire ecosystem has imploded over the last like 6 to 8 months or so. And China, of course, there's a lot of uncertainty, in fact, right now, right, with the lockdowns persisting, with their zero COVID policy, and with the Communist Party elections upcoming in October, right? I mean, there's just a heck of a lot of uncertainty. So in that case, I mean, who's going to benefit? I mean, it's going to be someone like India, right? So that's what I would say. In fact, I mean, I saw a Jason Lemkin tweet. I know we're going to talk about Jason's other tweet, but I saw Jason Lemkin's tweet saying that if this is a downturn, then this is the least bad downturn I have ever been through.
Wow.
Yeah.
That has some optimism in it. All right, for this week's Talk of Town, we have picked Jason Lemkin's tweet where he quotes Gartner spending on SaaS In 2020, it was $120 billion. 2021 is 152 billion. 2022 is $177 billion, and it's predicted that by 2023 it'll go up to $208 billion.
Wow.
So worry less about a few tweets, more about the opportunity ahead and here right now. Go sell something.
I mean, that's exactly what I was saying, that just, hunker down and build, I mean, the market is growing, there are so many problems to solve. The world is getting a lot more sassified and stuff, right? That's really all you have to do. I mean, you have to tune out the noise and focus on the problem that you're trying to solve, focus on your customers, focus on value creation, right? And just go build. I mean, I saw some interesting video clips on people dunking on startups saying this whole thing is a valuation game and it's a circus and whatnot. I feel like that's just a total mischaracterization. I mean, there's some of that happens, obviously, right? I mean, like they say, right? Don't hate the player, hate the game. Well, it is what it is. Business models are set up in a certain way, and you really have to, like I think Charlie Munger also says this, right? Show me the incentives and I'll show you the outcome, or something of that sort. So I don't think it's all bad, and to kind of mischaracterize the whole thing as a circus, I mean, that's just being dumb, I feel.
All right, so let's talk about some of the conversations which are lined up for this week. You already mentioned you'll be talking to Pushkar of Drip Capital,
Yeah.
right? And I think that'll be a very interesting chat
Yeah.
considering the market sentiment right now.
Yeah.
And then we'll be talking with Anuj of Milap.
Yeah, so Pushkar runs a very interesting business. Drip operates in about three different geographies, right? US, Mexico, and India. Now, these are very different ecosystems to kind of operate in, and they are basically financing SMEs, specifically trade finance. And given like how the macro situation is and so on, I mean, I don't know, like, how that impacts the business, right? And I would love to understand, how they're sort of operating, under these circumstances, right? They've enabled over $2 billion of transactions. We often say that, India is extremely credit starved and stuff. So yeah, innovations like this are super important. Milap, I'm sure that all of you have seen their ad on YouTube, right? Asking you to donate to one cause or the other. It's the largest crowdfunding platform in India. We've had the folks from Rangde earlier on the podcast as well, right? Which is more P2P sort of lending and so on. Milap is definitely interesting. I mean, I would love to understand how they operate this two-sided sort of a marketplace, right? Because I mean, if you don't have funders, then you don't have people listing their causes with you, and sort of vice versa, I would say, right? So yeah, very interesting business. Looking to understand more nuances of that.
Awesome. Perfect. So, folks, if you have any questions that you would like us to ask the founders we interview in the podcast, do tweet them to us at Operator Startup. Or you can also send us a message to our LinkedIn page, which is the Startup Operator. Or you can find rest of our social links in the description below. But if you would like all of these insights to be delivered straight into your WhatsApp inbox, don't forget to click the WhatsApp link that you'll find there. If you enjoyed the show, do leave us a comment as to how you're doing and what would you like us to talk about in the next roundup. And don't forget to share this episode with your operator friends. Thanks so much, and we'll see you again next week.
Hang on, I think I'm forgetting something.
What?
My dog stepped on a bee.
Get Startup Operator updates for free.